here's the interesting part. EM has underperformed so long that there really isn't many EM people anymore, like
No,
especially in the
no,
hedge funds. Like
the
there's
value
nobody.
people are all gone.
They're all
They're very
gone.
few players.
That's
Yeah,
I guess that's why I think it's still a great opportunity that there's just nobody with the expertise. They're either retired or they've been drummed out because it's underperformed so long. They're doing something
yeah.
else.
Well, Malcolm will be like
And
really
Malcolm,
happy that you tell him that.
yeah.
I mean, it's like so.
Hey guys,
Hey,
Hey,
Malcolm, how are you?
I'm doing well. Psyched about this. Thank you for having me.
it's so great that you could join us.
Yeah, absolutely, Malcolm. We were just your name came up because we were talking about how the underperformance of EM has been so dramatic for so long
I
that
don't like my name coming up with that.
a lot of the old no, in a positive way, a lot of the old timers are either retired like we are, or there's not, like the hedge funds can't find people that have EM expertise.
That's
But
right.
anyway, we'll get into that in a little more later. But welcome, thanks again, really, for joining us.
Of course, yeah, that should be fun.
All right, so I usually start out with an introduction because we know you, but certainly our audience may not know you. So I'll start with the introduction and lead off with a question. So Malcolm, thanks again. You are a senior portfolio manager for EM Equities and head of the active management team at Global X. You've been involved in EM for a long time, both at Global X and its parent company, Murray Asset Global Investments, since 2015. Before joining Murray, you were at Ashmore, which people don't know, it's one of the best dedicated or largest dedicated emerging markets fund from 2013 2015. You were at Citibank as an asset manager in the private bank. And obviously, you started your career, I believe, at Deutsche Bank, and you are a Penn guy through and through, which my old boss was. He'd love to hear that, George. You are a Penn undergrad and a Wharton School graduate, and you spent your childhood in Brazil. So
That's right, yeah.
let's start off with just a general question, going back to what we just talked about. So, Malcolm, EM. We talk to a lot of people that have been involved in EM for a long time. They see the opportunities and value, but a lot of the global big allocators still haven't embraced this kind of EM opportunity. Why do you think that's the case? And sort of give your theory of the case why EM should be, let's say, overweight or at least on the radar screen for most allocators.
Sure. You're right. And EM for the past 10, 15 years has been terrible. A terrible place to be. Maybe one or two good years within there, but overall dramatically underperforming the S&P and really more the NASDAQ, which is what I think most US investors have been focused on. And I think we came into 2025 and within it, people had a lot of self-reflection. They saw that I had a ton of concentration risk within their portfolios. They had a ton of profits within their portfolios, but they also saw a lot of uncertainty going into the year and in the forthcoming years. Part of that had to do with potentially a weaker US dollar, which the White House was essentially calling for. And as I think we all know, a weaker dollar, the best inverse relationship to that is emerging markets. We also had the combination of that with softer monetary policy, which has historically been good for EM as well. And then I'd say the third and fourth legs of, kind of combining what the ingredients might be for a positive EM cycle would be a stronger China. We're seeing a lot of positive news coming out of China, which is still the biggest part of the benchmark. And then just a lack of positioning. Financial advisors that we spoke to coming into this year had like a 2 to 3% exposure. On the institutional level, we saw more roughly 5-6% allocations. But if you look at the benchmark, the like MSCI All Country World, it's about 11%. So just to get equal weight with the benchmark and kind of cover your ass, excuse my language, if EM does do well, a lot of people had to triple or at least double their exposure to EM, which can be really meaningful when flows come in and start hitting some of these smaller countries. So yeah, we think the ingredients might look good for another good positive EM cycle.
Yeah, I think we're all in agreement with that. I mean, that's certainly Tom and I's view. And we finally had a good year, and and based on fundamentals. So I think that's a big change. So if we could have another good year, then we'd
That's
really
the
create a
hope.
trend.
Yeah. And I
And
think
then
a lot of
then
people
the money would
forget.
really start flowing in.
And it's really so fun speaking with you guys because you guys are really legends in this space. But I think you would probably acknowledge that a lot of people today don't really connect the dots or realize that between 2000 and 2010 or so, EM was up 345%, where the S&P was up 15%. And these things can happen again.
Malcolm, what you mentioned China? Obviously, there's a lot of pluses and minuses that people can talk about China. Obviously, being a big part of the index, it's the most important. What is your view? When do we start seeing the stimulus start to help? Right now, they've been stimulating for years. It's not helping the real estate market. We're not seeing the economy pick it up. But do you have any kind of sort of insights into what you're looking for as the triggers to get bullish on China from an economic standpoint? And obviously that'll be a trigger for the overall market. We've seen the tech stocks move, but the overall market, no.
Yeah, and I think I'm glad you said that because I think we can break it up into two pictures. You mentioned the tech stocks, and I think that global investors right now are just seeing the dramatic change that these AI companies, semiconductor companies, that whole value chain are making on the world and the way we're going to do business and interact in life going forward. And the blueprint is there for how successful they've been in the U.S. And they're seeing in China that the technology and the innovation is similar and it's done at a lower price, and that these companies are trading at much cheaper multiples. So they're seeing the potential here, and I think that they're trying to capture a bit of that arb. But the bigger question is China's like economy and bigger picture. And from my perspective, I think China's tough. It's still a bit of a black box, especially if you're focused on your next quarter or next 12 months performance. And the only way that we can get really comfortable with it is trying to align ourselves with the government, with the CCP, and what their goals are. And it's going to be a long-term thing. They talk about doubling their middle class by 2035. That's still, a decade away. And it does take a while. We're all hoping for this bazooka stimulus, but the stimulus that comes out has been coming in bits and pieces. And though it frustrates us as investors, I think you have to say it's probably kind of responsible to do it slowly. But their ultimate goal is to move away from a system where the economy is dependent on being the factory to the world, to be the manufacturing center for the West. And they know, the GDP equation is based off of net exports, government spending, private investment, and consumer spending. So net exports, the world has moved towards isolationism. Government spending, I think they've learned their lesson looking at the rest of EM that you can't spend forever. You take your economy to a fiscal cliff. Private investments are due to the nature of a global investment cycle, a bit out of their control. So the only variable that can really lead this story going forward is going to be that they can control is private consumption. So that's where they need to kind of address some of the demographic concerns. They have to address their safety net, their social safety net, and kind of improve retirement plans and healthcare and things of that nature. So people can stop putting so much of their net worth in cash savings and actually start spending it again and drive that economy going forward. So with that said, we're equal weight, maybe marginally underweight China, but within that, we're dramatically overweight China consumer and technology.
Yeah. So what I think the world is changing at an incredibly fast pace, and I think the U.S. is definitely not in a good phase. The U.S. is I would call it entering into a pretty deep malaise, and historically that's been very, very good for emerging markets. You get a weakening dollar, and you get capital starts flowing out of the U.S. into other markets, and so if you're going to be optimistic, you like that idea, right? But there's something that bothers me is that the whole world is really weak, and like the big winner right now appears to be China. They're the only ones who have thought this out long term. They have industrial policy. They're very dominant now in a lot of technologies, they're flooding emerging markets with with their cheap exports. Countries like Brazil are becoming, I would call Brazil like a client state of China now. And I wonder what if
That's
that's a
fair.
good world for investing. Because maybe capital will not flow back to China, will not flow out of the U.S. Maybe in this world it remains like a risk-off world where people, even in a dysfunctional U.S., maybe you should keep most of your money in dysfunctional U.S. What do you think of that?
Yeah, I think there are different ways of looking at it. I mean, from one perspective, I think a lot of people would say that the U.S. is doing well, especially from a bottom up perspective. That inflation is kind of getting back to levels where people are comfortable with. That you're going to see softer monetary policy, and that R&D spending is really picking back up to levels where you've seen, substantial innovation periods in other parts of history. And the new technology that coming out is really remarkable and improves efficiency. But at the same time, I don't know. There are a lot of question marks out there. I think, John, we've discussed it in the past. Like, I'm not sure what are the next generation, what my kids are going to do for a living, because there are a lot of possibilities for employment replacement through this new technology. So it starts bringing questions about universal benefits and how many days the work week's going to be, and what type of economy and political system not only the U.S. but the rest of the world's going to move into, um, which maybe does create more opportunities in EM who aren't at the levels where the U.S. is right now, and are kind of more catch up stories or demographic stories or penetration stories. And I'm not positive on the entire asset class, but I still think that there are a lot of countries within it that show a lot of opportunity.
Yeah.
Malcolm and Jean mentioned something really interesting. So there was, I don't, you probably saw the news that came out later yesterday, that ByteDance is going to invest, I think it's close to $40 billion to put I guess AI infrastructure and into
Interesting.
Brazil, in the northeast of Brazil, because of the cheap energy. This is, my mind, it's a big win for the Lula administration, a bigger win for Brazil in general, and an example of what Jean was talking about. So, given that, like, how do you let's jump to Brazil? How do you see Brazil? Do you think this is a big win for Brazil? How do you see? What is your opinion of the elections coming up, and how do you see things unfolding with interest rates where they are, et cetera?
Yeah, I think these types of things have been overlooked in Brazil. GDP continues to do better than expectations quarter over quarter the past few years, and that's not necessarily. I think it's in spite of governance in Brazil. Maybe it's some leftover from the previous administration or the previous finance minister who did some good things, but the Brazil's moved to a digital payment system, so there's a lot of efficiencies within that. I think that is flowing to the real economy. I think you're seeing more foreign direct investment from China, as you mentioned. Brazil's sort of in a client state for China, but like, yeah, you walk around São Paulo, you see BYD cars everywhere, and it's incredible. In addition to that, they've between Uber and iFoods, like, a lot of people who are sort of at the lower end of the economic pyramids are finding new ways to make money, and the gig employment system is adding value. So I think the economy is doing better than expected. Um, Looking into next year, though, I think there are other things we could talk about, but there are two obvious big drivers. One is monetary policy. The key rate's 15%. Inflation is at or below 5% now, so 1,000 basis points of real rates. I'm not sure. I haven't looked at the whole world, but that must be at least the top three most highest real rates in the world, and a very powerful carry trade. So I'm comfortable with the currency. I think the central bank is set organically to cut rates beginning next year. But from an inorganic perspective, right now, you have the governor of the central bank is a Lula pick. Lula's going into an election year. There's no doubt about it that he's going to feel some pressure from the government to cut rates too. So we could have a really impactful rate cutting cycle. And we've run some interesting numbers that the past 7 rate cutting cycles in Brazil, rallies in 4 of them, drawdowns in 3 of them. That's not that exciting. But when you look at how the actual moves went, those rallies, the average upside is 95%. And on the drawdowns, the average drawdown is 15%. So I think that risk reward scenario is super attractive for Brazil monetary policy on a standalone basis. Then we have the election cycle. The people are pretty pumped and interested about the whole political pendulum swinging in Latin America. We saw Argentina 2 years ago, and then midterms a month ago. We saw Chile recently, and I think Colombia is probably going the same direction early next year. But Brazil in October is the big one, and Lula's going to be 81 by the time he's running, I believe. He's had some serious health concerns. Last year when he went in for that surprise brain surgery, the market rallied 5% in that hour off that headline, which is super dark, but like it shows how investors perceive this administration. Um, and and then you've got a candidate on the other side, potential opposition, who won't announce his candidacy until April, in Tarcísio de Freitas, who the market loves. They see him as very pragmatic. He works with the center. He's worked with Bolsonaro. He's worked with Dilma. He has an engineering background. He's done a good job as the governor of São Paulo. And I think that if he announces his candidacy, the market steps up. If it looks like he's going to win, the market could really, really get on fire, especially if it's combined with a monetary policy easing trend. So Brazil could double if all these things go in the right direction. It trades at 8 times. Why can't it trade at 15, 16?
If Lula carries the election, do you think that's a big negative, or it's still an investable story?
I mean, it's investable, right? Lula's president now, and market's is up 40% this year. Last year, Lula started doing Lula things in the fourth quarter, and the market tanked 30%. But the first 3 quarters were pretty good because he kind of didn't interfere that much. So there'll be opportunities, but there'll definitely be a lot less certainty. A lot of people will just kind of give up and look for other opportunities. I think if he wins, the market would step back a bit. I think the recent rally this year is starting to price in potential change next year.
He's been relatively well behaved. I expected him to try to undo more of what the previous administration had done, but I was sure he would annul the Electrobus privatization, but he hasn't, right? It's like a lot of stuff. He's been more pragmatic than I thought.
Well, he's getting a lot of pushback.
I don't see him as a huge problem now. He's more like he seems like an old man who just doesn't want to rock the boat.
That's a good point. Like, he's got to be tired. I think a lot of people say that this fourth run might have to do with ambitions within his family as well. But also there's something to be said that the PT, the Workers' Party, isn't the huge machine that it was when in his previous administrations. I mean, the Congress and the Senate has gone towards the center right, so he can't carry things through as easily as he could in the past, and gridlock is good. So maybe even if he still wins and we have this current setup in the lower house, things could be not as bad as people fear. But the market still fears him. I mean, he's trying to this new income tax bill means that I think 65% of Brazilians are not going to pay income taxes with this new threshold. So that's a headline.
Yeah. Do you have a view on the elections, or is that something that's already you can invest on a view, or it's way too early?
I think it's too early. Yeah, I mean, the polls look like it's Lula's to win. Lula's to lose at this point. They say that it shows him having like a 5 percentage point lead, but Tarcísio hasn't even officially declared his candidacy. Bolsonaro hasn't gone out and endorsed anyone. I think there's still a lot that can happen.
I saw that BTG is calling for a central bank cut in January. Is that right?
I'm not sure if it's January, but certainly the first quarter. I think that's consensus.
You're expecting the first quarter.
Definitely. Yeah.
Yeah.
Malcolm, going around the horn, you mentioned obviously the political moves moving towards the center right in the countries, which is obvious it is. But touch a little bit on Mexico, which obviously is not moving in that direction, at least outwardly, optically. how do you view Mexico, the current political situation, the relations between Trump administration and Scheinbaum? How do you guys see things there?
Sure. I think Mexico's gone better than expected since Scheinbaum's election. A lot of people thought it would just be a continuation of what we saw with AMLO, and she's been, I think, just a lot more suave and kind of have toned down the rhetoric, and her interactions with Trump have been a lot less combative than we've seen in other countries. When the tariffs were announced on USMCA, this was Canada as well, and Canada retaliated. Mexico said, "We're not going to retaliate. Let's talk. Let's figure this out." And I think that's been sort of the right approach. I think in terms of take trade away, because I think trade will ultimately happen. The U.S. still needs Mexico in terms of manufacturing and the price of labor in Mexico, at least for a while. But if you take a look at what the concerns were before, is AMLO and Scheinbaum and the Morena Party, they want to build infrastructure. They want to support the lower end of the economic pyramid through subsidies and handouts and wealth redistribution, and they didn't want to change the tax code. So that doesn't work. Ultimately, something breaks unless your fiscal deficit starts rising. So AMLO was pretty good the first 4 years of his presidency. 5 year was a legacy year, and it was Pemex, it was the refinery, it was the railroad, and the fiscal deficit really spiked, which stunk for Scheinbaum because she got inherited a hand of cards that was pretty tough to deal with. Amazingly, even though she said, all right, my targets are to, I think, cut the fiscal deficit by 2 percentage points, she didn't get to her target, but she was able to consolidate. And I think a big part of that was tax collections. She's trying to take some low hanging fruit in terms of efficiency of tax collections, but there's not much more room to go there unless she decides to digitize the economy. Mexico is one of the only countries in the world where you can still pay your taxes in cash and your utility bills in cash. And if you go to a doctor, the credit card machine says it's not working because nobody wants to pay taxes. So until she addresses that, that's the lowest hanging fruit. That's how you're going to collect revenues if you don't want to cut spending. Because she's still, I think she's raising minimum wages by 18-20% in this coming December. So that's where the concern is. Monetary policy is fine. I think inflation is kind of under control, but most of the cuts are probably behind us. So unless you believe in a great deal near-term catalyst next year, I think Mexico's fine. But most of the positive sentiment was probably positive moves happened in 25.
Yeah, it's just not an exciting story in Mexico, is it?
There's not a ton of companies there either. Yeah,
it never quite gets its act together.
Yeah, but we'll see.
Brazil? How do you see Brazil medium long term? Is it a country that could actually grow more, or is it also stuck at a 2% level, or 2.5% in good years?
Brazil can grow if they deal with their the structural issues of attaching all costs to previous years' rates of inflation, because then you can kind of just never catch up to it. But if they start, if it's pension reform, if it's minimum wage reform, if they kind of start breaking that system, similar to what Malay's been doing in Argentina, then you can start getting the country into a better fiscal perspective. I think rates come to a more attractive place. Cost of borrowing comes down, and investment can really start picking up. But that all starts with governance, and right now that's still a question mark. But I don't see it. I don't know, Jean. I'm interested from your perspective as well. I mean, Brazil hasn't grown 5% in a very long time.
No, it's you don't 30 see years of low growth.
Yeah, I don't see it anytime near term being a Southeast Asian country or something like that.
Yeah. So what I wonder about Brazil is that it's now become highly deindustrialized.
Mm-hmm.
It sort of aspires to become an Australia. It's a service economy with very strong commodity revenues. It's just moved so much more in that direction with all the the oil. It used to produce 2 million, now it's going to 6 million barrels a day. the agricultural sector is the only sector that works in Brazil. It's the only like world-class sector.
Yeah.
And commodity prices are trending up. And it just seems, okay, so there's going to be a lot of success in the commodity side of the economy. Industrialization now, as a client state of China, you're not going to make anything. And so it's like Australia. You're a service economy. And can that provide better growth? Maybe. I mean, anything well managed can grow, but it's a very different proposition. It used to be all the good jobs in Brazil were in industry, and now there's no industry, right?
Yeah. And it's not a place that's going to get a ton of foreign direct investment unless they need, those natural resources. People aren't going to go there to build factories because it's impossible to fire people there. You have to pay a lot of additional benefits. It is similar like a Nordic country or an Australia. It has some in terms of big government values. It makes it a difficult place for investment. So I think when multinationals and U.S. companies are looking to take advantage of natural resources or talent or low cost of labor in Latin America, yeah, I don't see them going directly to Brazil. It's probably going to go more towards an Argentina or Mexico. Um, Brazil's still very closed, and even over the past 50 years, the industrialization that they have had was all kind of almost synthetic in a way. It was happening there because they had closed their borders through import substitution industrialization, and they said, "Oh, we're going to make everything ourselves." But at this point, it's a lot of those products haven't been very good, and as you mentioned, there are you see Chinese companies coming in and they're still making in Brazil using Brazilian labor and adhering to Brazilian code, but this isn't Brazilian innovation. That's not Brazilians creating jobs.
I'm very curious to see what they're going to do with the EVs, because if there's one industry that Brazil has been able to more or less keep intact, it's been the auto sector. And if they open up the gates for the Chinese manufacturers, that could be the end of the auto sector in Brazil. What do you think?
Well,
what are they doing? Do you have any idea what the strategy is?
Well, I actually, it's a little confusing because we talk about Brazil's auto sector. Yes, it has, but there are no big Brazilian car companies that have been tremendously successful. You've got the truck companies, you've got capital goods companies, and a bus company. But a lot of the actual manufacturers there are U.S. European companies that have had to go and set up operations there because it costs too much to import from the U.S. And that's what's happening with China. I think it's just a bit of a continuation. And if anything, it's the Chinese companies are going to eat the lunch of U.S. and European companies that previously were able to set up shop there because they're doing it much cheaper.
Right, but the EV sector is a very different model. It's much less labor extensive.
Mm-hmm.
Brazil had a big auto parts industry, which will be destroyed by this. And I mean, companies like Fiat, the Americans have left because the Americans are sort of abandoning Brazil. But a company like Fiat's been there for probably 80 years or something.
Mm-hmm.
The Americans had been in Brazil since the 1920s.
Mm-hmm.
And then, the Germans, Volkswagen's been there a long time. But yeah.
I mean, there's still. It also kind of depends on who's in power too. I think the automakers, the auto parts, the drivers, trucks industry, they still have a lot of union power there, and I think they have a lot of support into local and national elections. So they tend to be able to protect themselves, but we'll see.
Malcolm, you mentioned a couple of things about corporate governance. I'm just curious, how do you see corporate governance, let's say, just starting with Latin America? To me, Brazil is one of the better sort of companies there. They have a lot of IR people. They give a lot of information. But what's your view on overall corporate governance in Brazil and other parts of Latin America, which are obviously very important for large funds like yourself?
I think even EM as a whole, like it gets too much of a bad rap. There's bad corporate governance in the U.S. too. We've had Enrons, we've had Madoffs, we've had a lot of shady things that still happen, and it seems like anyone who makes the Forbes list of 40 under 40 and CEO of a new company ends up in prison 10 years later. So, like, I mean, the whole world is full of scandals. And yes, we talk about them more when they happen in Latin America or other countries because, I don't know, maybe we're pointing fingers or maybe it's interesting or maybe the stocks move a little bit more dramatically. But yeah, from my perspective, yeah, I agree with you, Tom. Like corporate governance in Brazil, yeah, maybe you've got a lot of companies that still have majority control of their companies, and they like to pay themselves fat dividends instead of investing into accretive projects. You don't have to invest in those companies, and some people like dividends. So like it's doing your homework and kind of having an understanding of what the mo of that board is going to be like. This is good, might be controversial, but even Russia, which obviously we can't invest in anymore, I thought some of those companies had some of the best run companies, best management teams in EM and globally. I mean, they really knew what they were talking about. They were great at capital allocation. Their numbers went to 4 decimal points. I mean, they were super, super sharp. So you get good ones and you get bad ones, but I think that's why you either put a blanket over it and buy a broad ETF that you're not going to get burnt by one blow up, or you're with an active manager who's doing their homework and making sure that you're with the quality teams.
Generally, the standards in Brazil are pretty high. Certainly, a lot better than they were, 3 decades ago. Well,
Yeah.
how would you compare Brazil, let's say, to an India in terms of corporate governance?
Yeah, it seems in Brazil might be a little further ahead. I think India's capital market system is a little more nascent. I mean, we're seeing a crazy IPO boom this year. It seems like we have one every 2 or 3 years. I don't know, was it last year or the year before you saw an IPO of a motorcycle company that had one showroom with 4 motorcycles in it, and it like IPO'd for $200 million or something. And you've got these small cap like retail investors kind of like gambling around it, and I don't know if they're. I don't want to accuse them of manipulating prices or whatever it might be, but the regulators are getting a lot more involved. They're definitely a lot more aware. They're stepping in a lot more, and sometimes it takes some mistakes and some downfalls before you start seeing the improvements and new standards come into play. So I guess like corporate governance is it's kind of broad from perspective. Like I think that they've got really good IR people. They're relatively transparent, but at the end of the day, there are a lot of controlling shareholders that have the power and they control the board and they treat these companies like they're piggy banks, and they might not be totally aligned with minority shareholders. So I think Brazil's still ahead of the game there.
It's interesting staying with Brazil on corporate governance. I have seen, I guess, just over the last 5 or 6 years, you're seeing a lot of changes on boards of Brazil. You're seeing some sell side analysts. You're seeing a lot of women that were sell side analysts or on the buy side now on boards. Where I mean, like you said, 20 years ago it was an old man show. That's an improvement. I mean, are you seeing the same thing? I mean, you see on LinkedIn people popping up, a sell side analyst, a woman. I'm on the board of this. I'm on the so there is a dramatic change going on. At least I see. Do you see what the companies that you're looking at, Mark, on the same kind of trend?
Yeah, I think one cool thing about Brazil is, some people look at it negatively in terms of like juniorization of talent, but and I think a lot of Brazilian banks used to have a lot of their analysts in New York, and now they're in Brazil. But I went to college. I was a history major and Latin American studies minor, and I got to Deutsche Bank. I didn't know really at my first internship how to build a financial model. I mean, the kids in Brazil are going to school half day, and then they're doing these estagiários, these internships the other half day, and they're working till 11 p.m. midnight every night as 18 to 22-year-olds doing these internships. But by the time they graduate college, they've had 4 years of investment banking experience or research analyst experience, and they're really ahead of the curve compared to a lot of U.S. liberal arts majors. So I think that has been a big thing, and maybe it takes a few decades, but the people who started doing that 10 years ago, 15 years ago, have become great senior sell side analysts. They've moved to hedge funds, and they've know that they can add value. They've developed brands for themselves, really strong reputations. They've had good interactions with management teams, and they're being asked to join the boards. I don't think being a board member in Brazil, is about being someone's cousin and getting a paycheck 4 times a year anymore. They're really understand that to attract global money, you have to show that every seat on your board is adding value to the company. So someone with an accounting background, someone with a capital markets background, someone, I don't know, whatever sector you're in with that type of specialty, and the talent is local. So yeah, I agree with you. It's a big improvement.
Malcolm, Brazil is a very, very sophisticated market of investors. I think surely one of the most sophisticated in the world. Is a very big financial sector, and there are thousands of highly qualified people. How does one beat the market in a place like Brazil, where there's just so many qualified people,
Yeah.
and they're so well informed, and also Brazilians talk a lot, unlike
I was
Mexicans.
going to say, well informed is very polite.
Mexicans don't tell you anything, but the Brazilians love to talk, and so they're like so plugged in with all their friends. And so how do you do it?
Whisper trading. I think you see stocks move a lot ahead of earnings in Brazil, which makes being an international investor. I think you're at a bit of a disadvantage of that, at least short term. And if you share meetings with local investors, everyone's kind of focused on a certain line of a balance sheet for next quarter, and our investors are a lot more interested in a long term opportunity. So we're trying to find quality companies that have historically been able to deliver ROICs or ROEs above their cost of capital, and be able to compound earnings, take their growth and reinvest and compound them on a go forward basis. So I think that's the big differentiator. Don't try to play the game of the locals, because we're not going to win. We're not as informed. We're not on those WhatsApp threads and all of that. But just take a different approach. I think what's really interesting that's happening right now is, as we mentioned earlier, Brazilian interest rates are at 15%. So these local investors are having a very tough time keeping money in their funds, because local allocators say, well, I can put money in treasuries and make more than 1% a month, totally risk free, or I can put it in corporate investment grade bonds and get 20% plus a year. So things are having money in equity markets in Brazil is tough, and these local managers have seen a ton of outflows. They're starting to try to differentiate themselves. Funny enough, like we're talking about can we play their game, they're trying to play the US game. Like you saw, Itaú is now publishing research on NVIDIA and Google and Microsoft and Meta. So I think a lot of local fund managers are becoming a lot more diversified and becoming global investors. They're kind of tired of just playing around in the Brazilian market. And who knows, maybe that creates inefficiencies and more opportunities for US investors to do well there.
Yeah, it's because the U.S. market's done so well, so everybody wants to invest there.
They want to chase it. Yeah.
Do you think generally you could say that most Brazilian investors are short-term oriented, like in the way they approach their trading and their investing?
I don't want to say all, definitely not all. Some have more of like a private equity mindset, but I would say most of local money, and at least from my experience in terms of the managers that I've shared meetings with, worked with. It's definitely about figuring out who's going to be above or below expectations next quarter.
Yeah, so that makes sense. So the way to beat them is to think longer term than they think.
For sure. I also think Brazil's I don't know if your perspective, but Brazilians are a little pessimistic about Brazil. And maybe it's because they've been they're reading the newspaper every day. They see what's happening on the streets, and they get frustrated. And when markets go down, that impacts them more than it does an international investor who might be more well diversified. So when things go bad, I think they're more reluctant to get back into the market, which kind of creates that might be happening right now, because even though Brazil's done well this year, previously it hadn't done that well. And Brazil, we just talked about all the things that has going for it in 2026. And it's still trading at below 10 times earnings. I think 8.5 times earnings with a 7% dividend yield and 15% ROEs. It's like why isn't more money going in here? And I think part of that is, the opposite of a home bias. It's just pessimism at home.
What market, Malcolm? When you look at, let's say your particular fund, right? So
Mhm.
it's a giant global fund, and we talked about the allocation. So if you were to like place like Brazil, since we're piling on Brazil, you look at the liquidity in Brazil, it's still obviously not where it was. And if you do get this kind of, let's say you get this interest rate movements in the first quarter and money starts to flow in from internationally, I mean, you mentioned the potential upside, but I mean, it seems to me that if we get this, like firms like yours, your global start to, I mean, it's going to be like a rocket, almost straight up, right? I mean, because the liquidity just isn't there. Like this, the IPO market's been shut.
Yeah.
So what is your feel that if this starts to happen, is it just going to be like a rocket straight up for quite some time because of the
If the two catalysts discussed earlier happen, so if Brazil starts cutting interest rates in January, and they're not going to go crazy, but say they start throughout the year, start cut maybe 300 basis points, which sounds like a lot to us, but 15% to 12%, 12% still really high. I think that's sort of the base case if the election remains uncertain. If people see that Tarcísio is winning in the polls by 10%, a big spread, money's going to start coming in and the currency is going to strengthen. It's going to, be below five, 4.5, get to low fours. And that kind of creates a self-fulfilling cycle because as the currency gets stronger, inflation gets stronger gets weaker, comes down through the translation effect. And then the central bank has more room to cut rates. So it's like a combination of interest rates will start because it just needs to on a standalone basis because real rates are way too high. But then if the election starts going in the quote unquote right direction, then that monetary policy, that cutting cycle will be a lot more dramatic than we had initially expected. And I agree. I think market would just absolutely shoot up. I think roughly like 90% of Brazilian companies are levered up in floating rate debt. So as interest rates come down, before you start seeing the improvements of a capex cycle or people borrowing and spending more, better asset quality at banks, you see net interest expenses on your balance sheet coming down and positive earnings revisions just because of what the central bank is doing. So will see really very powerful positive earnings revisions that could last a few years.
Malcolm, are you seeing global allocators increasing positions in Brazil?
Marginally, not a ton. I think it's still a bit of a wait and see. I think that let's see if this rate cuts happen. Let's see if the monetary policy cycle happens. We've been seeing interest in Argentina after this last midterm election for sure. We have an Argentina ETF at Global X, and before Milei was elected 2 years ago, that was about just under $40 million. In January of this year, it was at I think 1.2 billion. When this election started going poorly, in October, it looked like Milei was running out of steam or his momentum. It was down to I think like 550 or something. Now it's back above 800 million. So you can just see and this is all U.S. investors, or mostly it's a U.S. listed fund. Um, People are paying attention to local politics in Argentina, and flows are very meaningful coming back and forth. And so I think that's interesting. I think we're getting a lot more questions on Colombia right now. One, because they're saying, all right, well, what's the next Argentina going to be? And they see a very left wing president in Petro, and they say maybe there'll be political change in Q2. But the other part, which I find most fascinating, and I find it hard to kind of extrapolate in terms of what type of upside it could translate into, is that we're seeing a lot of headlines about potential regime change in Venezuela, and U.S. investors can't own Venezuelan assets; they're sanctioned. So people are saying, well, maybe this is a derivative play. If there's regime change in Venezuela, cost of equity in the region should come down. The migration trends of people, Venezuelans moving to Colombia, will reverse. There'll be less of a fiscal burden on the Colombian government. They'll be paying less subsidies to support these people. Colombian companies, various of them, have operations in Venezuela. So if that economy improves, they'll be selling more goods there. So that was sort of my surprise in the past few months that we're getting a lot more interest there.
But Colombia's done very, very well this year.
Yeah, and still trades at I think 6.5 times earnings. So, like,
I was just at a conference. I spoke at a conference in Colombia with a bunch of issuers, and I mean, most of the performance is the old Bank Colombia, right? It's just going
right.
to rocket, but there seems to be an interest finally in, as you know, you had these economical groups that kept all the shareholdings. They're starting to like open up about corporate governance and investor relations, which I thought was encouraging. And this new market that you know is coming up, NUAM, which is coming up in January to start operations, which is the combined merger of the Colombian, Peruvian, and Chilean stock exchange. Could be interesting. Do you know anything about that? And are you watching that as a potential catalyst for MSCI or anything of that nature, this kind of new exchange?
I'm watching it from a distance. I'm interested. Peru always has, not always, but sometimes seems like an amazing opportunity. There's only one company you can really buy there. Maybe there are three or four semi-liquid ones, but only one that we can buy. So if this deepens the capital markets system there, and Chile it could be a very attractive story as well. And we already discussed Colombia. So if we see a wave of flows come back into emerging markets, and Latin America is the favored region, and there is this new exchange there. And by the way, the B3, the Bovespa in Brazil, I think owns 20% of Nuam. They're a minority investor there too. Um, yeah, I think it could open a lot of doors, and we need more opportunities, more investments, and innovations, and uh, new options for investment. So it would be exciting. That reminds me of the B3 thing. I met with them recently. Other things happening in Brazil is that, not only in Brazil but in Latin America, the crypto markets are obviously exploding in terms of volumes. Equity markets are happening, but they said that they were exploring opportunities in terms of creating betting markets, saying this is already happening. It's already consuming like 2 to 3% of people's paychecks, people's discretionary income on average. So if we could, legalize it and formalize it and put it onto a stock exchange, but I just think it shows, and John, we mentioned it earlier, that like Brazilians are very advanced and sophisticated in terms of financial markets, and they're ahead of the game in terms of digitalization, ATM machines, credit cards, whatever it might be. And I think that could be the same for capital markets.
Yeah.
Malcolm, sorry, go ahead, John.
Tell us the bull case for Argentina again. I know you're quite excited there.
Yeah. So we I went through a bit of the background in terms of Malay coming in, and he basically ran for president saying everything will be different if I run. There'll be no more subsidies. I'm not going to, people are going to have to pay their taxes. I'm going to shrink the government. um, so basically, my first year of the presidency is going to be very difficult for people. And growth will come down. I'm going to let the currency float. That will lead to inflation. And that's an amazing platform to run on and still win. And basically, he won by 11 or 12 percentage points against Peronism 2 years ago. And basically, by people understanding that Argentina's has defaulted 7 times in the past half century, and they needed change. And he was promising something different, difficult medicine, ripping off the band-aid, whatever you want to call it. And it happened. And he taught, he walked the walk. He public sector job cuts, budget reductions. He translated into the first fiscal surplus in 14 years. Inflation spiked initially because he let the currency move up, but then annualized inflation moved from 200% to below 30%, so about 25% a month to less than 2% a month. He's done a lot in terms of opening the doors for privatizations, and he's basically just built a lot of credibility. So I think that this has, Argentina did have a difficult first 12 months. I think GDP was negative 3.5% last year, but we've hit the bottom, the trough. And this year, GDP should be growing 4 to 5%. Inflation has already come down meaningfully. Poverty levels have peaked and have started coming down. The central bank has been able to control inflation, and rates have been coming down. He consolidated power in midterm elections, and now he can push through more reforms. So what we're looking forward to next is, people are comfortable with the story now. They know what Argentina has to offer in terms of not only labor, but lithium, copper, energy. And we think foreign direct investment is going to blow open the door. We think we'll see more flexibility in terms of foreign exchange, which will allow MSCI to bring Argentina back into indexes, which could bring more flows in. We think that we'll see more tax and labor reforms, simplifying tax code, modernizing labor to kind of boost formal employment, but also make it easier to hire and fire people, and a lot more. So there's a lot of opportunity there, but importantly, Argentina's market cap to GDP is about 10%. Brazil, which we've discussed that I think is very cheap, is around 42%. The US is 225%. So like it's just dirt cheap. And banks are talking about loan growth of 50% a year for the next 3 years. Things are happening, and I think it's overlooked and pretty exciting.
Malcolm, the government owns.
What's keeping the MSCI from putting Argentina back in the EM?
It's FX liberalization. So basically, you couldn't take money out of Argentina under the previous administration. Malay has made that change where there now is more of a free flowing system, but he's done so in steps. Like the first step was saying, oh, it has to stay in the country for 60 days, or don't quote me, a certain amount of time. I think now it is checking the boxes for MSCI. But they just need a little bit of time to digest it and say, is this really happening? Is this for good? They don't want to put it back in the index and then see the currency blow out and everything happen all over again.
Malcolm, the government owns a large number of shares. I mean, through different pension funds, et cetera, and also the government directly. And there's always been that talk of the government obviously having at some point to sell, which would be great because it would increase liquidity. Is that something that you're looking at as well as a theme?
I mean, you speak with the management team at YPF, and they talk about they were brought in. Malay tapped that team as he was getting close to becoming president, and these guys came from the private sector. They run companies in a very shareholder friendly manner, focus on profitability and smart capital allocation, and this is something that Malay's talked about, from energy companies to materials companies to even the airline. He wants to move forward with privatizations. And I think the most notable one he's done in his first year and a half or so is the state water utility. But there's definitely, you mentioned, there's so many other companies that he could do a lot more.
We haven't mentioned India a lot, which do you have strong views on India at this time?
Yeah, India is our biggest overweight. We have an India strategy as well, and India's been it hasn't been the right call in terms of being the biggest overweight this year. It's been a laggard, and all of EM is up about 30%. India's pretty much flat, maybe up 2% or so, and the biggest reason there has been because of the trade rhetoric with the U.S. And some people say that India is playing hardball too much. Everyone else seems to be getting a deal, but I think that they're negotiating from a position of strength. Modi didn't want to take a bad deal and sacrifice the well-being of his voter base. He knew he had some important state elections in the second half of this year, which he's done well in, and he's been able to consolidate power, which from an investor perspective is very important because it means he can continue pushing through his economic reforms and kind of modernization of that economy. But it seems like with this new ambassador in India right now, the rhetoric has been really positive about a potential trade deal at year end. But then in the background, there's a new free trade agreement between India and the UK. There's one pending that should be done by the end of the year with the EU. There's one with Australia. They're talking about one with Canada. So India's been doing some pretty smart things in terms of trade. And then, so like we think of India not as, let's buy it for next quarter or buy it for next year. This is something we like, buying for your kids' 529 plan or your grandchildren, whatever it might be. This is a economy that has the best demographic dividend story in the world, definitely in emerging markets, if not the whole world. Average age of 27, a literacy rate of the youth population above 90%, It's the biggest beneficiary of any supply chain diversification out of China, and has a very very strong administration in terms of governance, of pushing growth, attracting foreign direct investment, while still focusing on fiscal consolidation and improving trade balances all at the same time. So it's sort of an emerging markets dream right now, and we're really excited about it and think there's an opportunity given the laggard performance in 25. I don't. India has always been kind of expensive. I think its average PE multiples like 19 and a half times. It, when it was really quote unquote expensive last year, it was like 21 and a half. It trades at 20 times now. But, India's that looks expensive compared to 12 times in China. But, average emerging market GDP growth is 3 or 4%. India's growing 7, 8% GDP growth. Profitability in emerging markets is like 10, 11% ROEs. In India, you get 16 to 18% ROEs. And then your cost of capital is coming down because you have a dovish RBI, central bank, and you're also seeing deepening capital markets. The bond system is now included in the global indexes, and money's coming into the system, and governance is improving. So that spread between your profitability and your cost of capital is getting wider. So, yeah, multiples are elevated compared to the rest of EM, but when you account for growth and you account for profitability and you account for your cost of capital, I think it's justified. And then at the same time, like, let's take a look at what else should be driving India. India imports about 80% of their energy needs. Oil's at $60 a barrel. So this should be very good for India. 20% of household savings in India lies in gold prices. Gold's at all-time highs. So that really is very good for consumer confidence. The central bank is cutting rates. On the fiscal side, the government has been doing a lot of positive stimulus initiatives for consumption. Like, all these things are very positive and represent tailwinds, but equities haven't paid attention that much this year.
If you had to rank the opportunity for next year for 26 between India, Brazil, Argentina, and let's add China just because it's so important. How would you see, like, how do these rank in terms of opportunity?
Yeah, I would say, oh gosh, that's tough. I'm more certain on Argentina than I am Brazil, because Brazil has a sort of a binary election system situation where Argentina just had their midterms, so now we're off to the races. I'm more confident on India. I know you said 1 year, but I'm more confident on India longer term. From a risk-adjusted performance perspective, I like India better. But in terms of absolute upside, I think I rank Argentina at the top. So probably Argentina, India, then Brazil. But those are also like my top three.
Where would you put China?
I'd put it at the end because there's just so
At the
much
end,
uncertainty.
yeah.
We could wake
I
up
agree with
tomorrow and there's a new trade fight.
Yeah.
It's just too much headline risk.
Yeah, no, I agree with you. It's very interesting. I haven't focused that much on Argentina, but I appreciate your view on that.
Thank you.
Malcolm, what's it going to take for you to invest in places like Venezuela? Is it they have to be on MSCI, or do you dip your toe into these kind of frontier exotic places?
Well, Venezuela's sanctioned, so I can't. It takes some big initiatives at the White House. But beyond that, frontier, like, we have some exposure in Kazakhstan right now. We have exposure to a Georgian bank. Both of those banks that we own, the one in Kazakhstan and the one in Georgia, we like a lot because of the growth opportunities in Uzbekistan, where we think that is market that doesn't have a lot of investment opportunities. So you play it through other countries in other through other companies in other countries that have growth channels there. But Uzbekistan has 40 million people. That's obviously that's often overlooked. I think the average age is 26. The government, after many years of kind of not being in the interest of minority shareholders, is now into shareholders' rights and free market reforms. And we see a lot of opportunity there, especially in terms of the banking penetration, digitalization sectors.
Amazing. Malcolm, we took up a lot of your time. It's been amazing. I just have one last thing I wanted to just ask you. You're looking at the world, obviously you focus on innovation. How are you using AI in your investment? How is the firm, let's say how the firm and yourself using AI for your investment process? Have things changed very much for you? Are you still the old line analog guy? Have you jumped into the whole AI?
No, we're exploring it as much as we can. It's nothing you can hide from. It's there, and it's a huge advantage to a lot of people. So we have a few strategies, active strategies at Global X that use either a research provider or sub-advisor within our parent company's family, called WealthSpot. That is it's a different subsidiary within Murray, that focuses on AI investing, and that's been a big help and to those strategies, and those strategies are often largely built upon what type of output and recommendations that the models are suggesting, and that's been fascinating to watch and learn about. But in addition to that, there are a lot more simple tools, whether it be helping with client letters, digesting sell side research. Looking for citation when we're running, when we're doing our own, writing our own white papers, things of that nature, and then some calculations, running sensitivity analyses and things like that. The systems are getting better and better, and we're very excited to see where they go.
How is Bloomberg's AI platform working?
I just got on it today. I have to play around with it a lot more to better understand it, but it's called Ask B, and I think it's sort of a chat GPT using Bloomberg intelligence. But
I'm really curious to see. I don't know anybody who's really used it. I'd love to know.
Let's catch up in a month. I can't wait.
Malcolm, listen, this has been awesome. Thank you very much. We appreciate your time and learning, obviously, about your views on Latin America and the world. Great.
Thank you, guys. It's been awesome. Happy holidays. Look forward to seeing you soon.
Thanks so much, Malcolm.